This is the first release of a educational series program here at forextrainingdepot.com, and the certain topics we are going to talk about in this series. It's been requested by our subscribers, and we believe we have a duty to fulfill their requirements. So because of that, we thought we would release some educational series, and our viewers can benefit from those. They will be all free of charge, so you don't really need to buy anything to watch the educational series. It's going to be very much beneficial to all who watch these videos, and I hope, and we hope at forextrainingdepot.com, that your trading improves to the next level. Right, so let's carry on. What we will be talking about first of all in our first topic, actually, and I believe if time does allow us, we'll talk about another topic as well. But I believe, by looking at the time, we should be able to get a full topic in, and the topic we'll be discussing today is placing support and resistance lines. I get a lot of traders, new traders, intermediate traders, sending me emails saying, Baz, where do I place the lines? Which one do I know is stronger? How do I know it's strong? I just can't seem to suss it out. So I'm hoping this video will enlighten them and hopefully point them in the right direction. Okay, this is the euro dollar chart. It's the daily chart, and the first thing you need to remember when placing horizontal support and resistance lines is that you need a specific amount of data. The first length of data you need at least would be 6 months. That's the first. But the second category would be where 1 year is pretty sufficient, providing you can relate the lines in past history to the left of the charts. If, for example, what we've got here on this chart is a down move, and if we can't really see a lot of touches points, then we would need more data, or we would need to go to the next degree time frame. So that's the first thing you need to bear in mind. Is the first is where it needs to be at least 6 months, depending on how the data looks. For example, if it looks like a straight down move, okay, not many bumps and valleys and peaks, then basically you need to get more data. So for example, if we had 6 months of data here, that probably would just leave us somewhere round about, if I just show a line horizon, somewhere around about here, so that area here is not really enough. Okay, sorry about the circle. I know it's very peculiar, do apologize. Just ignore it. So yes, therefore I've gone for the 1 year data series, data length, and not to complicate things, just go for the 1 year. the more the better. It really doesn't matter. You can go for more, but you only need about a year's data to place constant horizontal lines. Okay, so bear that in mind, and let's place some horizontal lines. But before we do, we need to know where to place them, because we've got so many peaks and valleys. Okay, these are the valleys, these are the peaks. Which ones do we know? There are so many, you know, which one do we look for? Okay, so we need to filter out the bad ones. As you can see, there's so many. I can go on forever. So you know, are you going to be placing lines on every single one of them? Well, obviously not. So how do we know which ones to use? The way to do it, the easy way to do it, is to look for V's in the price. Okay, and when I say V's, I mean V's. Okay, the more sharper the V, okay, steep, the more stronger. Okay, so if we pick out some V's here right now, I can see some V's there. Okay, here I can see some V's here, here. Okay, excuse me, some V's there. Okay, so as you can see, we can see some V's. When we do that, you know, as you can see now, we've already filtered out all the noise, these little noises here. Okay, however, to a new eye, to a highly trained eye, it's pretty visible. But to somebody whose eye isn't that well trained to spot those, he or she might find it hard to locate these areas. So my tip would be is that to go to the line chart, and as you can see now, this is the line graph. It's a lot easier to spot the V's. I'm sorry, there's one there. Okay, it's a lot easier to spot the V's. Okay, and use those V's, the V's that stand out. As you can see, this V stands out, this stands out, this does stand out. Okay, but this stands out a lot more. Okay, it's a lot sharper here. We can also use this one, it's a sharp one. Okay, we could use these as well. So sharp V's. Okay, so we'll place some lines, and the first one I think we'll start from here. Okay, my marker is blue, so I'll change the line color to something else. There we are, it's better. Okay, so we've got that there. We've got a V here. Okay, we've got a V there. We've got a V here. Okay, as you can see, it's pretty well nicely falling into place. Okay, so these are the V's we have right now. So it's pretty easy, as you can see. It's not rocket science, guys. Okay, but then sometimes you'll come across this. Okay, and I hope you understand what I mean by that. A double area. Okay, there's one touch there and one touch there. Let me draw it in separate circles so you understand what I'm saying. These are the double areas. These are what I call, when you normally get that, these are what I call areas where we could expect to see a range. Okay, we could expect to see a range. That's what I call these areas. They're both valid. Okay, so normally what tends to happen when price comes to those areas, it forms a range. Okay, so you need to still be aware of it, and you need to mark both of them on the chart. Maybe color code them so you know what they are. I will color code this one, let's say brown or maroon, sorry, and I'll color code this one also maroon. Okay, so let's go back to our candle chart and see how it looks. And as you can see, just before we go to the candle chart, you can clearly see a nice drop in price. Okay. Okay, a very nice drop. Okay, it's looking very nice. Okay, so let's head to the candle chart. As you can see, it's zoomed out right now. If you were to place those lines separately, they do look a bit more difficult to spot. However, the line chart makes it a lot easier. Okay, let's zoom in. There we are. These are the lines that we have just placed. Okay, so if I go back, as you can see, there's the lines, and you can see it's very well respected. Okay, very well respected. Okay. You know, these lines, they're respected really nicely. So these are very nice, strong lines. Okay, strong lines. Okay, so that's the way we place the lines, and we wait for those areas to be reached, and we make our decisions based on that. It doesn't mean that price will go to those areas. For example, here, just because it's taken it out does not mean it'll retest it and then go down. It could go up. That's when you need to bring in other analysis, other tools to break it down into let's say a section where you would know where price is heading. Okay, so anything can happen. There's nothing, you know. There's another line here which I can just see on the corner of my eye here. You know, let me draw you a straight line. Okay, it's touched here. It could go up or it could fall. You know, it's unknown. Okay, but this is the basic concept of drawing horizontal lines. The rest come and fall into place, but this is the basic way of drawing horizontal lines. You don't want to be too fussy. You don't want too many lines. Okay, you just want lines that tell you where the market is at the moment, and the lines that matter to the market. It's not lines that matter to you, it's lines that matter to the market. And as I've shown you, go to the line chart. If you can't see it, look for the V shape. You know, the deeper it is, the more stronger that area, the more significant that area.